You are listening to episode 5 of the CMD Project. I'm your host, Daniel Lackey. Today we are joined by a good friend of mine, Alex Jaber, commercial loan officer with Bay First Financial Bank. Tell us a little bit about yourself, Alex.
Sure. As Daniel had mentioned, Alex Jaber. I'm a commercial loan officer with Bay First. Community bank headquartered out of St. Petersburg, Florida. Really one of the last few community banks in the area. And our primary purpose is to serve our immediate market, so the Tampa Bay area, as in Tampa, St. Pete, Sarasota. That's really our nugget. So my job really is to empower small business owners like Daniel and individuals within the local market and help deploy capital resources through different financing options. And that's really what I do. So.
I know you mentioned you're having a record year. You're top producer with the bank
Yep.
as far as loans go with commercial loans.
Correct. Yeah.
So what's some of your biggest partners right now in St. Pete area, Tampa area?
I think I've been blessed and fortunate enough to have a mentor who's not only my mentor but my boss. And coupled with a lot of outbound networking efforts and just really doing right by the client and having them ultimately refer business as well. Having that mentor to introduce me to the movers and shakers in St. Pete has been really integral to my success. I think I'd also attribute it partially to kind of my upbringing, really, with the bank. I got a degree in marketing, didn't really think I'd find myself in a banking role, never really thought about, what it would be like if I was in banking, but kind of took an internship with the bank on a whim just to get, some exposure fresh out of college, professional work experience. And I remember really early on with our previous CEO, he wanted to go out for coffee, and I ended up obliging, and we went out for coffee and had a really good conversation. And ultimately, he had decided that he had kind of foresaw me going into the role that I'm in currently, in the lender role. Didn't really know what that meant at the time, but entertained it just because it sounded interesting. And I kind of went through a management trainee program where I got to shadow a lot of the key managers and different departments in the bank. So going into my lender role, I was already really familiar and really comfortable with a lot of employees at the bank across different branches and different departments. So, I'd like to think that is partially the reason that a lot of people within the bank feel comfortable sending me leads and referrals compared to other lenders, just because of the rapport that I've developed over the years.
Nice.
Yeah.
So, man, I know you do commercial loans. So small businesses come to you, because I know banking's a subject where...
Yeah, it's not the sexiest.
Yeah, so let's give some advice to business owners out there, man. How do you leverage to getting capital? What are some businesses you see? So a business you see that an industry that has a track record of not succeeding, where the banks kind of put their nose up at, and then maybe an industry where the banks are salivating and licking their chops. Like, okay, this is a good one. The ones that you do see succeed.
Sure.
I would imagine restaurants are...
That's what I was gonna lead off with. I don't remember the statistic off the top of my head, but restaurants are inherently one of the riskiest industries, especially startups, right? I wish I remember the statistic, but most banks and lenders consider a business under 2 years old a startup. And with startup, there's more risk inherent. Specifically with restaurants, there's a specific default rate, like 50 to 60% of startup businesses, specifically in the restaurant industry, end up failing within the first couple of years. So for the ones that are more seasoned with, decades of historical cash flow and tax returns to work off of, there's a little bit more flexibility, but there is risk with restaurants, as you had mentioned. For us, I think, kind of the most desirable type of loan for us is going to be owner-occupied commercial real estate. That could be for a manufacturing business. It could be for a number of different businesses, but that's really what we like to target. There's a lot of, banking needs outside of just a loan, whether that be depository needs, treasury management, or merchant service needs. Um, Kind of full circle, we like to really accommodate our clients by giving them like a full suite of products and services that help ultimately help them run their business better.
For
So
sure. So I noticed, man. You said 50 to 60% fail rate
yeah,
on
it's something like that. Don't quote me on it, but
So
it's very high.
so what benefit does the bank have from giving those types of loans then if there's a 50, 60% fail rate?
So it's a good thing
Because
you
at the end
asked
of the
that.
day, I mean,
Yeah,
they're not going to give out a loan out if they don't have some sort of benefit to it at the end of the day, even if they do fail.
sure.
Explain that. I'm curious about that.
So this is a perfect example of where SBA lending comes into play.
Mm.
And for those who aren't familiar with SBA lending, it's the Small Business Administration. It's a government program that incentivizes lenders and banks to lend to industries or specific businesses that may not be creditworthy, or they might not qualify under traditional conventional terms, which is what I do. I'm a conventional lender, but we are a top SBA lender. But for situations like that, SBA loans are attractive to lenders because there's a guaranteed portion to the loan, which is usually from 75 all the way up to 90% guaranteed. So what that means is, in a default situation, as long as the banker lender checks all the boxes on the requirements for an SBA loan, and the default, the government's going to come in and they're going to cover 75 to 90% of the outstanding principal balance. So
Okay.
that helps mitigate a lot of risk. It helps lenders get comfortable with lending to people who might not qualify otherwise. And ultimately, that program is in place to help boost the economy and help promote small business.
Okay. So if there's an entrepreneur out there who's thinking about starting a taco truck or a small restaurant downtown or wherever it might be, there are avenues for them to take.
Absolutely.
What's some other businesses that aren't so sexy, man?
Um, Trucking is another difficult one, like freight trucking, long hauls, that kind of stuff. We've had to pass on a number of opportunities. I'd say more so nowadays, storage unit facilities, as those have become really popular, as well as car washes, right?
So those are sexy.
It depends. It depends, right? Because, I'd say that there's a fine line between where, these can be cash cow industries, but there's also an oversaturation of them within a finite
Sure.
location. Specifically, let's think about like St. Pete, right? On 4th Street alone,
Car wash.
how many car washes are there every couple blocks? So there comes a point where you have to really lean into the analytics on location, tenure and experience of the people who are running the operation.
So it's an accumulation of things.
Yeah. So again, I think for banks and for lenders, our job really is to make sure that we're doing right by the client and we're not putting them in a position that may over leverage them or put them in a position where a loan might not have made sense right now. And so that's why I like to think of commercial lenders partially as educators, right? Because we're the ones really getting deep and down into your financials. We're getting a good understanding of business operations and, business continuity, and really full picture, like, does this make sense? If not, why not? And how do we get to a point where it does? So
Case by case.
Yep.
So if it's someone fresh, green, young, they want to start a car wash, they go to you for a loan, probably not going to happen. If it's somebody that has tenure, they've ran multiple businesses, they've scaled multiple businesses, that's going to put them more in a position of the driver's seat.
It definitely puts them in a more favorable position.
So let's, because I want to give some value on this, man. So let's talk about these younger entrepreneurs, the ones that are just now breaking out, this new generation. The ones that haven't quite made it, because those guys who have made it, they probably know all this stuff. So what kind of value can we give those guys that maybe they're running a business and they want to take that next step, they want to scale? What steps do they need to take to
Yeah, absolutely. There's a lot of great resources for young entrepreneurs, people who are interested in maybe starting a small business of sorts. Business plan, super important. right?
Pen to paper.
Pen to paper. A lot of great resources for business plan creations online. SCORE is an organization
Score.
that you can use. Yes. Also, the University of South Florida has a program for young entrepreneurs where if you engage them, I have several contacts over there. If you engage them, they will help coach you on creating a business plan. They will help coach you on creating projections. They'll help coach you on basically the full suite of items that you would need if you were to engage a lender for financing. They walk you through it, and it's free of charge as well.
Nice.
So no cost to them. And I think that's a good way to kind of get familiar with what banks are going to look for, right? Because if it's a startup, you're not going to have historical tax returns. You're not going to have historical financial performance to really base the loan off of. So it's going to weigh really, really heavily on three things. It's going to be experience. It's going to be how thorough and thought out is the business plan. And then we're going to take a look at the projections. They might be right sized, but we're going to take a look at the projections and the assumptions that the client comes up with, and then ultimately decide if those projections make sense. Sometimes they're maybe a little bit over ambitious, but those are the three items that they're really going to look at. They're going to scrutinize and make sure that if they were to provide financing, that they're doing it to someone who they feel confident that they'll be able to get repaid.
Okay. So resources for business plan, that's step number one.
Mm-hmm.
Step number two, what, contact someone such as yourself?
Yeah, absolutely. Again, and not every bank and not every banker has this mentality, but I know with the bank I work at Bay First, we're very much so relationship driven. And a lot of times I work with people who aren't necessarily bankable on the lending side, but I provide them my cell phone. They'll text me questions. It's kind of coaching to a certain degree, of course, right? That's not really my expertise, but having worked with so many different businesses, having seen so many different things, I can kind of help guide to a certain degree, like what makes sense versus what doesn't. Yeah.
No, I mean, because I bank with you guys, and I can tell you that it's absolutely you guys are great, man. Great customer service. I mean, I was texting you last night at what 9:30 because I needed a wire transfer, and you were right there texting back and answering. So, all right. So that's for those younger entrepreneurs, man. So there are resources for them to get a business plan. They can contact you, but ultimately it depends on the type of business.
Yeah,
some are more risk adverse. Some are you guys are a little bit more confident in. What are some of those businesses? I mean, I'd imagine. This is just me guessing, service-based. So I don't know, maybe HVAC, like trades these days.
Yep. As you had mentioned, HVAC, manufacturing with that are seasoned. Those are great ones to go for because they usually have a lot of lending needs.
Manufacturing, so
it could be a number
of anything. So
production.
Like cell phone cases.
Exactly. It could literally production of anything. A lot of times they'll look to leverage because they'll have accounts receivable that's coming in. They need to float receivables because sometimes depending on the contract they have set up, it could take 30, 60, 90 days to actually collect on payment. And that's where it's good to have a banker come in and say, hey, you're having at any given point, 1 to 1.5 million in AR. Why don't we leverage that and get you a line of credit? You can use that line of credit to make payroll. You can use that line of credit to acquire more inventory. Pretty much anything. A line of credit's there for short-term capital needs, and you can leverage the accounts receivable knowing that that's a form of repayment. As soon as the business collects on those ARs, they can use that to pay down the loan. So those ones we deem pretty low risk just because of the cash cycle of the business. You would expect the payment to come usually under 90 days.
Yeah, and I've leveraged line of credits before. So speaking of which, I need to increase that with you, man.
Yeah, 2024. So
I know. I'll get you my taxes over.
Yeah, let's do it.
But okay, so we've touched on that, man. What about those? What about business owners? Maybe they are a little tenured, but they haven't quite scaled to where they want to be. Let's say we've got a business. It's HVAC company. They're 3 years in business. They've done pretty well. You know, they're not. Obviously they're still out there working. What do they need to do to scale? I mean, is a commercial loan something they can use to leverage to scale their business to the next level?
Absolutely. And I won't be able to speak super in tune to it, but I know through the SBA program, 95% of what they're originating are business acquisition deals, they're mergers, which ultimately will increase, your client base. If you're an HVAC company and you're looking to acquire maybe a competitor, the owners are, retiring, or they're looking to sell the business, you can basically inherit that business, inherit that book of business, and ultimately grow your existing operation by merging with another one or acquiring another business. So that's a really common way that I see business owners try and scale their business.
So instead of trying to scale internally, they acquire an older mom and pop, take their client base, take their phone numbers, reputation, book of business, incorporate it into theirs.
There are business brokers who that's all they do is they look for owners and companies or businesses that are trying to sell, and then they try and find a buyer, basically. So there's websites, there's contacts.
And where do you fall in on that? Do you deal with a lot of business brokers?
Not really. So the way the SBA program's modeled, we are able to pay a broker fee through that loan platform or that loan program, because the way that the bank receives income is very different from the way that I originate a loan. And by that, I mean, with the SBA program, as I had mentioned, there's a guaranteed portion and there's a non-guaranteed portion. There is an investor pool for that guaranteed portion on the secondary market. And a lot of times banks and lenders will sell that guaranteed portion for a premium. So it's instant income versus with what I do, the bank is going to retain that. They're going to retain that loan. It's going to stay on our books, and they're going to make their income based off of the net interest margin that they receive in monthly payments. So the model's a little different compared to SBA, whereas you can originate an SBA loan, go to the secondary market, do a bulk sale of all the guaranteed portions, and make a premium income instantly. Whereas with conventional lending, it's going to be a slow burn, which ultimately you're just trying to improve your net interest margin. And your net interest margin is going to be how much in interest the bank makes on loans versus how much in interest they're losing on deposits. And that's a fine line, and it's a fine dance that you have to do, especially in this market, to stay competitive.
Yeah. All right. So would you say, though, most of what you're seeing is people taking out a loan to do a business acquisition to scale?
Yeah, it's a very common method to grow the business. Absolutely.
More so than just give me $100K and let me try to grow it myself.
That's another way. Yeah. So it's I've had people come to me and look for different financing solutions. As you had mentioned, right? Traditional working capital. What can that be used for? Marketing, whether that's digital or by any other means. Onboarding additional staff. There's a number of different ways you can grow your business. I'd say probably the quickest way would be through mergers and acquisitions, but that typically doesn't fall within my bucket, just because with conventional financing, you need to be fully secured with collateral. SBA doesn't have that requirement, and typically with acquisitions, sometimes real estate's involved, but a big portion of what you're purchasing is called goodwill, which is an intangible asset, but you're basically purchasing the name of the business, right? The reputation. You're purchasing that book of business, that client base, which is intangible. So it never really falls into the conventional bucket unless we can figure out a way to fully secure it. But SBA is a great vehicle to get financing for that type of loan.
Okay.
Yeah.
Now let's say you've got someone who's working for a company, maybe working for, let's say it's a service base. Let's say it's a painting company, whatever it may be, something tradesy.
Mm-hmm.
They have a little entrepreneurship itch. They want to go start their own business. How do they get funding for that?
So,
like, they have the experience, the actual hands-on experience. Maybe they don't need anything crazy. Maybe they just need $50K to get something up and running.
Sure.
Is that something that an entrepreneur could do?
Absolutely. And again, and part of what I love about my job is that it's such a case-by-case basis. You really have to get a full understanding of the client's personal financial picture and their business financial picture, because I've had in the past, maybe they're not eligible or they don't qualify through commercial needs or the commercial lending, but they have, or they own their home and they have equity in it. They can pull a HELOC out. They can leverage their primary residence to get capital to start or fund the business in the beginning, in the infancy stage, season it, let it grow a little bit. And then once it's, 2 to 3 years, then it can fall into my bucket. But kind of leaning into what you had mentioned, right? Cash intensive businesses. I definitely want to stress the importance of, when you are a cash intensive business, of course, right? Which makes sense. You're trying to minimize your taxable income. So maybe you don't claim all the cash that you're receiving from work that's being done, which has its benefits, as we know. But when it comes to lending, right? Lenders and banks have to work off of what you file with the IRS. The tax return is going to be our Bible. We're going to review that to the T. And ultimately, what you're reporting on the tax return is what we're going to use in our underwrite. So you can tell me, tax return showing 500,000 of revenue. You're telling me that there's an additional 200,000 that's not being accounted for, which could be true and is likely true, but we're not able to, work off of that basis. We have to work.
The underwriter's got to go buy the book.
So there's a number of times that I've run into that situation. It also happens on the personal side, right? As you had mentioned, servers or people who receive tips for cash. If you're not claiming that when you go to purchase a house, let's say, or something like that, again, they have to work off of what you file with the IRS. So it's a fine line that you have to do between trying to lower the amount you pay in taxes versus when you need a loan. We're only going to be able to work off of what we see on the tax return. So
throughout the year, you've got to implement maybe tax strategies, which that'd be a conversation for a tax strategist.
Exactly.
Which we do have one coming on in a few weeks.
Exactly. Yeah. I say definitely. And I think just a general PSA, it's always good to have a good attorney. It's always good to have a good CPA or bookkeeper. And it's always good to have a good banker.
Now, I know when I first started my business, man, I mean, I hear people say that you've got to have a CPA, you've got to have a bookkeeper. And there's this, I guess, conception that those things are super expensive, because if you're a business owner and you're just getting started, maybe you're not bringing in a lot of revenue.
You want to minimize costs. You're trying how do I minimize as much in expenses and try to be as profitable as I can from the beginning, which is hard.
Yeah.
And the reality of it is, a lot of times businesses don't start off profitable, which is normal.
Yeah. Yeah. And the way I've kind of learned over time, trial and error, is if I can delegate certain things out, like my bookkeeping. I pay my bookkeeper $300 a month or somewhere in there. It's not a lot of money.
And it saves you a headache.
So much of my time that I can apply towards money generating activities.
Exactly.
Myself. So I feel at a certain point it becomes a small price to pay. Same thing with payroll companies. I have a payroll company. It's $42 every time I run payroll.
Yeah.
But it's a giant headache off of my back.
Yep, exactly. And time is money at the end of the day. So whatever you can do to free up time to allow you to run your business, because you know your business better than anybody, right?
Yeah.
You're able to free up workload. You're able to free up time by having professionals in, accounting world or in a payroll world. That ultimately makes your business more successful.
For sure. And I think that's something a lot of these, a lot of business owners starting out, or maybe they're not super profitable yet, they don't really see that. And delegation, man, delegation, get it off of your plate, focus on making money.
Exactly. Yep. Totally agree with that.
So let me ask you, man, kind of shifting here. What's, because you've been doing this how long? 6 years, 7 years?
Yep. I've been in, fresh out of college in 2019, I started banking 3 months after I graduated. So I've been in banking for 6 years. I've been in a lender role since 2022.
Is it boring?
It is not boring at all, actually. Nice. There's some days where it can be a little bit slower, but I'd say, with the amount of workload that I have to do and how unique every loan is, that I wake up and I have a different day at work every single day.
Breaks up the monotony.
Absolutely.
Same here, man.
Yeah.
I can't be in a cubicle.
Yep.
Same thing every day.
Mm-hmm.
Hitting enter, shift, control.
I did it. When I first started at the bank, I was data entry. So I was going through spreadsheets. I was going through credit memos and inputting certain different key metrics into a spreadsheet that would ultimately generate a graph. And I was like, you know what? Like, just pay your time, pay your dues, right? You're fresh out of college. I'll take any experience I can get.
Yeah.
Understanding the big picture was to end up in the role that I'm in currently. So just kind of put my head down and worked hard and was able to, reap the rewards.
Nice. Now, over those 6 years, man, because I know you deal with a lot of business owners. What's I kind of want, man, one big success story you've seen from a business owner, maybe something they did, and then one failure.
That's an interesting question. So one,
like, have you seen a business come to you, you gave them money, you got them secured in a loan, and then they just scaled and were very successful in it?
I haven't, to see like an immediate scale to that degree, maybe not so much, but I know. So for PPP, right? During COVID, all these different businesses that were struggling to make payroll and many business ultimately went out of business. And we at Bay First took it upon ourselves to really work in hyperdrive, I'd like to think, 60 to 80 hour weeks every single week.
During
COVID, yeah, right. We were all in lockdown, all working from home. And ultimately, Bay First ended up allocating or deploying, upwards of $3 billion in PPP loans. We were the number one bank for our size in the entire nation who lent PPP money. And I know there was a lot of controversy, or not political, but there was a lot of scrutiny against some of the bigger banks who were only deploying PPP loans to some of their larger clients. So a lot of the actual small businesses here around the country were underserved. So yeah, we helped thousands and thousands of businesses all across the country. And I know during that period of time, I had received probably somewhere between 20 to 30 letters in the mail, of handwritten letters in the mail from some of these business owners expressing like how important it was that we got them that money and that we quite literally saved their business. I had conversations with people at midnight or 1 a.m. calling me crying, saying that had they not gotten that funding from their actual bank, right? Because we were lending to people who weren't even our clients, right? Just because that was our civic duty to help, save these businesses. The amount of calls, late night calls and letters that I received of people who just explaining that quite literally saved their business. That's really warmed my heart and really, put in perspective, like, this is why I do what I do, because strategic financing solutions for a business owner, like a business is a business owner's, like, that's their pride and joy, right? And to have something out of their control like COVID come through and just absolutely demolish or destroy small businesses, it was really nice to see the gratification that was received for helping these people, because it was very stressful. 12 to 14 hour work days every single day for months, right? So burnout happened. A lot of people inevitably quit just because of how stressful the work environment was.
Skeleton crew.
It was insane. We called it all hands on deck. We would have an all hands on deck meeting every couple days, and these meetings would happen sometimes at 1 a.m. and we'd be clocking back in at like 7:30. Like, it was insane. So you were to go to anybody at Bay First who was there during PPP. It's funny, actually, our CEO had shirts made and handed them out to every employee that said, "I survived PPP," and they put it on a t-shirt just because of how insane that period of time was. Yeah, it was just
so that's some of the
wild time.
Some of the success came of that. So.
Absolutely. That's part of what, and I attribute that to the overall, not just success for me, but the success of the bank, right? Because, I came on to the bank in 2019. We were right around, well, actually, I remember it was probably like 2 months after I started working. Our CEO went out and handed a $100 bill to every employee because we had just hit 500 million in total assets.
Nice.
This was, again, end of 2019. We know 2020 around March is when COVID happened. And so leaning out of COVID, so less than a year later, we doubled in size from PPP. And
So that's what I was saying, because I mean, everything's a strategy in business. So a lot of those people you loan the PPP to, they
came on as clients. They came on as clients. They came on as customers. Mm-hmm. Yeah. Yep. Exactly. Because again, like they were underserved. Their current bank was not giving them what they needed. So us being a community bank, us being relationship driven, we did everything in our power to make sure we were getting money to these people.
Took a big risk by loaning to a lot of small businesses, but here 5 years later, it looks like it's paying massive dividends.
Absolutely. We did double in size within that small period of time just because of our strategy, basically.
Nice. That's business right there, man.
Absolutely.
CEO needs a raise.
Yeah, right.
So tell me about a failure then, man. Like a business you saw that maybe crashed and burned. What did they do that other businesses maybe a word of caution?
It's hard to say. So I would say that there hasn't been a business who has engaged me and received lending who's failed. There have been businesses who have come to me asking for financing, and we ultimately turned down just because of how their picture looked. And we knew, like, okay, like looking at their balance sheet, they were already over leveraged, operating in the red, not profitable. It would not have made sense for us to lend out another $1 million loan. And that's where prudent lending comes into play. As I'm sure you probably know, banks are heavily regulated.
For sure.
And we have constant audits, OCC examinations to take a look at our portfolio, make sure that we're lending within our means and ultimately making good quality loans. So I can't say that a business has engaged me and it ultimately ended in a failure, but I have seen businesses who are struggling to stay afloat and are basically living off of debt, which isn't a great business model. I'd also heed caution to businesses who are in maybe a financial struggle, just to make sure that, you know, if they're not going to be able to receive bankable financing or long-term debt, just be careful with private loans or private money, just because sometimes you'll see repayment terms will be sometimes you have to pay every week, sometimes you have to pay bi-weekly, and you're going to look at a percent interest rate that's, you know, 12 to 15%, and it might make sense, or you might think it might make sense in the moment just because you're strapped for cash and you need capital. But in the long run, I've seen just over time, some of these businesses who end up taking debt like that sink just because they can't make the payment and they end up defaulting, and it ultimately kills the business. So
be cautious on the debt that you undertake.
Not only that, I've also seen recently just in this market, right, because relatively high interest compared to where it was at a couple years ago. But I'd say where we were at in 2020, 2021 is unheard of, right? People getting sub 3% loans is not the normal. And I think people got used to that, to where now they're seeing loans at 6, 7, 8%, and they're a little scared to pull the trigger. And it really is it's a dance between trying to be profitable and also winning deals, because a lot of the other bigger banks will try and price loans below some of their competitors, which would be us. So we like to think that we'll never lose a deal to rate if it's a relationship and it's a quality deal, but you have to be profitable. Again, a bank's a business too. Our net interest margin is important. So if we're going to try and lend money out at, you know, sub-market rates where, you know, competitors are at, you know, 6% or 6.5%, and we want to stay competitive, so we need to either be there or beat them. But then we have clients, so we have people at the bank who are within our money market or CD accounts at, you know, 4%. But then there's someone down the street who's offering 4.25, and we're like, well, we don't want to lose that relationship. But sometimes you have to be strategic in how you approach interest rate when it comes to deposit accounts and loans, because again, like we're a business at the end of the day. We ultimately want to retain the relationship. We want to retain the deposit account, but it can be a struggle at times when there's so many competitors out there trying to win business by having the highest rate on a money market or having the lowest rate on a loan. So
Mhm.
it's a moving target, really. Honestly, it's something that we talk about weekly. I know that senior management has to have constant meetings going over interest rates and where we need to be to stay competitive but also profitable. So
It's kind of
um,
you got to find that fine balance, man, that sweet spot.
and it's ever changing, literally daily, right? So it's just something that it's just part of the business.
Yeah, yeah. And I know you mentioned earlier, but you see some businesses living off of debt. So they open a credit line with you guys. They use it, pay it off, use it, pay it off.
Sometimes
every
they don't
month.
pay it off, and that's what we call an evergreen line. So again, lines of credit are typically going to be used for short-term capital needs. We never want to see you purchase uh, fixed assets like machinery, equipment, uh, real estate with a line of credit, because the full intention of a line of credit is to provide capital during a cash shortfall, whether your business has seasonality, right? Um, it's slower during summer. You need a line of credit to make payroll and keep the business afloat up until, towards the holiday season, things start to pick up again. But yeah, we definitely don't want to see lines of credit that have a hanging balance. They're called evergreen just because it doesn't really make sense to, I mean, as a bank, it's good for us because we're just getting interest income month over month, but to the client, they'll have a $250,000 line of credit that's fully drawn. They're just making interest only payments every single month. The principal is not going down at all. So they're literally just putting money in the bank's pockets. So we don't like to see clients in that position. So I know on an annual basis, we'll review lines of credit just to make sure, like, hey, you've had a hanging balance for, 6 months. What's the expected repayment on it? And if they don't have an answer, a lot of times we'll term out the line and we'll say, okay, well, why don't we'll close the line, because borrowing from a line of credit tends to be more expensive than a traditional term
Oh,
loan
for sure.
in terms of interest rate, and it's a little bit more risky in that majority of the time it's going to be variable rate. So if rates were to go up, your rate would go up on the line of credit. If it were to go down, you would take advantage of that. But sometimes it doesn't make sense for you to have an outstanding line of credit when you can just term it out at 6.5% instead of at 8.5%, and then just start paying down the principal.
Yeah.
So we are not in the business to over leverage customers. We're also not in the business of defaulting and trying to seize assets. So that is the last thing we want to do. We have a really, really strong and knowledgeable special assets team where their whole entire job is to do loss mitigation through different means for clients, whether that's loan deferrals, payment modifications, different ways to try and get businesses who are struggling to make payments over that hump and ultimately back to where they're profitable and able to
And
make
it's
loan
not
payments.
a malicious thing. It's something to
Never. And sometimes people will take it that way. But again, the last thing we want to do is seize assets, seize collateral.
Because that's what ultimately would happen if you fully default.
Yep.
So you're trying to mitigate that. Okay.
Exactly. Again, at the end of the day, we want what's best for our customers, because if our customers are happy and they're making payments, then we're doing well too. So
for sure, man, for sure.
And actually, I think I'd like to say there's a great story that actually happened this week, which kind of is a testament to how our bank operates, if you don't mind me sharing.
Yeah, for sure.
But church lending to churches, a fairly difficult thing to do for most banks for a couple different reasons. First off, nonprofits are ineligible for SBA financing, so it has to be conventional.
Mm-hmm.
So 501(c) businesses, churches fall under that category. Also the model, right? With a 501(c) or with a church, there's going to be no ownership structure. There's a board who manages and governs the church or nonprofit, but there isn't an ownership structure. So typically with commercial loans, any 20% or more owner is considered a majority owner. They have to guarantee the loan. With churches, since there is no owner, technically there's not a guarantor that you could go after. Not only that, but banks, the last thing they want to see is a news article saying a bank foreclosed on a church and sees,
bad for business.
It's bad for business. It's bad PR too. So a lot of banks won't touch churches. I've probably done, I think I just closed a church loan a couple months ago. I think that's probably my third or fourth one that I've closed at the bank. And again, there's, mixed thoughts on whether or not church lending is good business, but every church loan I've done has been extremely profitable. They typically have healthy balances too. So I'll always take a look at a church deal. I always will. And about a year and a half ago, we had a gentleman who operates a church off of Madeira Beach, and he's with one of the larger banks I won't mention, but he had really been struggling just to have a conversation about lending. Like no banker from his bank was willing to have conversation about it. He had, I think, engaged 5 or 6 other small to medium sized banks who would not give him the time of day. I don't remember exactly how he ended up finding out about Bay First, but the amount of joy and gratitude that he had expressed to us, it was me, one of my partners, Stacia, who I know you know.
I know Stacia, yep.
Yep, and then our Pinellas market president, Adam Curtis. We told him to, give us a call, let us know, what your lending needs are. Let's try and figure something out. And then we ended up actually driving out to the church and meeting him and, seeing the operation, meeting, some other key members of the organization. And then we sent him a checklist of items saying, hey, if, you wanted to entertain a loan, these are all the items that you need to provide. Ultimately, that ended up falling through, not for anything other than they just weren't ready documentation-wise to try and receive financing. And last weekend, we get an email on Saturday from the same gentleman, the head pastor of the church, saying, I wanted to express how thankful I was that you were willing to hear me out in my time of need when no one else was. We didn't end up getting a loan, and we're going to actually sell the property for $4.5 million, and I need a place to park it. And he even put in the email, it's funny how now that I have all this cash coming and all the banks who are trying to engage me and get me to deposit my money there, and they wouldn't give me the time of day, and you guys did, and I want to start that relationship with you. So we ended up scheduling a meeting with him on Tuesday, and yeah, basically we won the relationship. He's going to move all of his accounts from his current bank. The sale of the property is going to happen in August, and then we're going to be getting a $4.5 million deposit into our account. And then we're going to start having conversations about loans. So
nice, because then he has leverage then.
And that's where it's like now everybody wants to bank him just because
it's funny how that is though.
Exactly.
That's a point.
And so he recognized that, we were willing to hear him out when no one else would. And it all ended up, resulting in this.
Well, that's that customer service. That's what I tell all business owners too, man, is it doesn't matter what industry you're in. First and foremost, you're in the customer service industry. You have, especially in today's age, man, today's day and age, 2025, the fucking competition is easy. There's no competition. So if you so much as pick up your phone and you provide good customer service, you're ahead of 90% of other businesses and your competition out there.
It's such a foreign concept to so many people. It shocks me really, and I can't tell you the amount of times that me just being readily available, picking up the phone when they call, and ultimately just being available when they need me. Like I've had people who are very experienced with receiving lending tell me how foreign it was to them that I'll pick up the phone at 6 p.m. on a Friday.
Yeah.
And I'm like, that should just be standard process for someone in this role.
If you want to win that $4.5 million deposit.
Exactly.
Pick up at 6.
Exactly. So it always shocks me because to me it feels like that's doing the bare minimum, right? Being available, answering the phone, and providing updates to people during the loan process, because the loan process is cumbersome, it is daunting, but that's part of why I'm here, is to help ease the transition and make it as smooth and seamless as possible. Yep.
Educate.
Yep. And which is another thing. It's like a lot of times you'll see banks will have a credit box. And if it doesn't fit the credit box, it's an immediate denial. Sometimes it even gets put into a system and it'll be an automated response like, hey, it didn't meet X criteria. It's just not going to work. Whereas with us, everything's worked by a person, an individual. All of our decision makers, all of our senior management is in the area, within St. Pete, Tampa, and Sarasota. So everybody meets. We have loan committee twice a week. Everyone meets at our corporate office. It's really much.
Your guys' corporate is downtown, right?
Downtown St. Pete. Yep. So all the decision makers are here locally, which I think also goes a long way, because at the end of the day, our primary goal is to improve and enrich the local community.
Yeah, I see that, man. You guys have done great for my business. I mean, I have a line of credit with you guys. I have all my accounts with you. I have 2 businesses with you guys actually right now. So.
Yep. We appreciate the business. As always.
Man, give me 5 years. I'm going to be one of your biggest clients.
I'm ready. I totally expect that.
So it'll happen, man. It'll happen. Now, I think kind of what we take away from today, though, is don't try to hide too much of your financing, your income, if you're looking for a loan, because there's got to be a paper trail of some sort to the IRS.
So if you're even thinking about, and that goes for individuals too, if you're thinking about receiving a loan, you have to report that income.
Yeah.
You have to.
That just financial savviness, don't over leverage yourself with too much credit, and don't be a restaurant.
Don't be a restaurant. And again, for entrepreneurs, small business owners, solid business plan, projections with assumptions.
Score.com, right?
Score.org or score.com. Also, the University of South Florida has a resource. I don't remember the acronym off the top of my head, but I have sent 3 or 4 different businesses to them. It's free of charge. They will coach you and walk you through creating a business plan, creating projections for no money. Like it's a no-brainer.
A business plan can be retroactive. Like if I'm in business 2-3 years, I can still, and I haven't done it yet.
Yeah.
So for those business owners, they can still create their business plan to leverage for a
exactly. Hey, what does it look like if I open another location? What does it look like if I make this strategic decision? How does this improve my revenue? How does this improve?
Because I think some they say, oh, well, I've already been in business 2 years. I don't need a business plan, or they just kind of put it on the back burner. But a business plan, you can leverage that, and you can write it yourself.
Yeah, exactly. And again, there's so many resources that are for free that you can utilize that help make it a little bit easier, but formulating something and getting it on paper is always a good idea.
Yep. Because then it makes it easily digestible from somebody else.
Exactly.
So, but I think those are kind of the 3 takeaways, man. I mean, anything you want to add? I mean, as far as if they're looking for a commercial loan, that they need to ensure they're doing not enough, not a lot of debt, good profit loss margins.
I'd say, it really comes down to, we say the 5 C's of credit.
Let me hear it.
So first C, we're going to say capital, just money, right? Second C is going to be collateral. What can we use to secure the loan? Third C is going to be capacity, debt capacity. Can you repay the loan? Third is going to be character, or fourth is going to be character, that's where credit comes into play. Character, like we'll pull LexisNexis, background research, that kind of information. And then last is going to be conditions, market conditions, industry conditions, conditions of the loan. Those are all things that we have to take into consideration with every single loan. So it's something to be mindful of.
Okay, so the 5 C's, man, the 5 C's.
5 C's.
Live by that.
Yep.
And then if people want to get a hold of you, Alex, small businesses, they want to secure credit, they want to secure a loan, how do they get a hold of you?
Work email, alex.jaber, Jaber, at bayfirstfinancial.com, all one word. My cell phone is 813-520-9207. Just feel free to shoot me a text or email, or even give me a call, and I'd be more than happy to sit down. We could even take you out to lunch. We love Bayfirst loves taking people out to lunch, so we can get lunch. Yeah, the Lure's a great spot. The lure's
a
a
little
great
pricey for my taste, but
hey, if it's on the bank,
you're paying, man.
Yeah, exactly. It's good sushi. So I'd say, yeah, if anyone's interested in just getting more information or just sitting down and just trying to, pick my brain, I'd be more than happy to have a conversation with you.
And you'll at least talk to everybody.
Absolutely.
And not just turn them away.
Oh, no, never. Because again, if it's not a loan now, it could be a loan later. And again, there's several instances where I have worked with people in the past that don't necessarily fit lending now, but they recognize the value that the bank provides and as a resource and kind of a person that can provide feedback on your business.
Yeah,
it ultimately will come back at some point.
For sure.
So.
And I kind of live my business to that under that as well. Because I don't understand the thought process behind some of these businesses where I don't have time to talk to that person.
Yeah.
You don't know who that fucking person knows.
You never do. Exactly. That's just do right by everyone. That's a motto I've lived by my entire life, and it's definitely bled into my professional career. And I think that's part of the reason I've been so successful early on. So
I mean, I've had claims we didn't sign. We talked to them. Obviously, we're gonna hear them out. We'll review. But then 6 months, it could be 6 months, a year later. Hey, my friend Sally referred me to you. That's a huge claim. So businesses, think about that.
Absolutely.
At least talk to everybody.
Yep.
So, all right, Alex, we're pushing an hour here, man. So I wanna thank you for coming on today, brother.
Yeah, thank you for having me.
Appreciate the insights on business lending, commercial loans. Thank you, man.
Sure thing.